Time now is 9:16 on your Money Watch this morning. SpaceX is set to launch as a publicly traded company this week.
That means that anyone will be able to own a piece of that company and participate in what is expected to be the biggest initial public offering of all time. CBS News business analyst Jill Schlesinger joining us live now with advice for potential investors. So Jill, good morning to you. Investors are scrambling to get a potential piece of the SpaceX IPO. So what is your advice to them?
Okay, everyone take a deep breath, because like any risky individual venture, a stock, crypto, your friend's small business, the best way to protect yourself and to participate at the same time is to limit the amount that you purchase to just a fraction of your overall investments, maybe 5% or less. This is a way to keep you out of trouble if things don't go as planned. And of course, remember, this is a company that is currently operating at a loss. It's a huge bet on Elon Musk. What could possibly go wrong?
What could possibly go wrong? That is the question. All right, Jill. So a lot of folks, the average Joe, you and I, talking about this. What does this mean for the average person who has a 401k?
Well, I think even if you're not going to participate in buying shares through the IPO, SpaceX may be inside your retirement account a lot sooner than usual. Last month, the NASDAQ and the Russell indexes announced rule and methodology changes to allow SpaceX to be included in their indexes within 2 weeks of the IPO. You know, in the past, newly public companies would have to wait a year before being included in an index. So the real reason behind that, by the way, was that there was an idea that you were protecting ordinary investors from IPO hype. One holdout, Standard & Poor's, they're not changing their criteria. So if you own an S&P 500 fund, SpaceX will not be eligible for inclusion in that index until at least mid-2027.
Jill, we just mentioned high inflation a few minutes ago. What does this deal signal about our overall market?
Well, I mean, I think the fact that SpaceX can target a $1.8 trillion valuation while being unprofitable tells you that there are a lot of investors out there that are willing to pay up for potential growth. So this IPO, along with these future deals for Anthropic and OpenAI that will be coming, they could raise a couple of $100 billion. This is a scale without precedent. So here is the boring Aunt Jill warning. Ready? When you see big risk taking, when you hear about there's a listing and index standards are being loosened, when there's huge enthusiasm and hype for innovation, it can be a sign of an overheated market. I'm not saying it can't continue for a while. It always, though, can end badly. To protect yourself, you stick to your game plan, you don't buy into the hype, you make sure that you have a diversified portfolio, keep yourself in check, not too excited on the way up, and that will hopefully avoid that feeling of being awful and feeling like you cannot do anything right on the way down.
Yeah, we definitely don't want that feeling. Jill, you are never boring, and you always give great advice. So thanks so much for your time this morning, as always. And you can catch Jill regularly on CBS Mornings.
Thanks, Jill.